as you know, there's an incredible amount going on, and it's becoming increasingly difficult to make sense of it all. What's real, what's not? And the question we're all asking is this a bubble? And I don't even know if that's the right question to ask. I'm trying to process all of this. And one thing I know is that I don't have the answers. I don't know everything. I'm not a guru. I'm just trying to figure it out like the rest of us. I'm lucky I've had 30 years experience, but that doesn't make me more right or wrong than others. And our own perceptions can become our investment biases as well, where, I don't like crypto, therefore it's a bubble. Or I don't like US equities because they're very expensive now. They're a bubble. But mostly these things are shades of grey. And many reflexive trends, which many identify as bubbles, can go on for a lot longer than many of us imagine. Or maybe we're at secular shifts. Those things happen too. I mean, we've got to make sense of all of this. And we did talk about this in the past in one of the 2-week campaigns about has everything changed. But really, what's happened since then is many more things have gone to extremes. And I want to make sense of it. So what I wanted to do is get 2 or so weeks of incredible content where we ask real amazing experts, some of the best in the world, whether it's Mark Cuban or Lacey Hunt, whoever it may be, to come and talk to us how they're seeing this, what their perceptions are, what they think the bubbles are, what they think are the real opportunities, what's the signal and what's the noise. I mean, as you know, I did that piece recently on Realvision where I explained my concerns about the speculative risk that I think is excessive in the US markets. I looked at this and saw the record speculation option activity, the record amount of volume on pink sheets, the most speculative stocks. I mean, dwarfing anything of the past. We've seen the massive explosion of the rise of companies like Tesla off P ratios that were unprecedented. But there again, in the past, Amazon's traded off P ratios of 800, and it never really corrected. The business caught up. So I don't know how much is speculation and how much is a true shift, how much is the game changing. But I see it kind of everywhere where we've got these record extremes. The future expected returns from equities by most people who use kind of structural analysis to look at this is negative 10%, negative 5% over the next 10 years. And that concerns me that maybe it is a bubble. Maybe this is unsustainable. But within that, I think we're going to see a bifurcation, my favorite word, as you know, the bifurcation of some things that aren't, that these really are real trend changes. When we look back at the Wall Street bets, and I kind of alluded to this in my piece recently, is that I think was a signal change and not noise. That was a signal change of the democratization of finance, something that we built Realvision on the back of. And it feels that the average person is taking control of their finances and their lives. What does that mean? It can mean all sorts of things. It could mean broader participation in crypto markets, which has a place for them because of the higher expected future returns. It could be that speculative activity, just because of the sheer numbers of millennials entering the investment place, means that the numbers go up anyway. Because before it was traditionally the baby boomers who were driving the activity, and now you've just brought in another 80 million people.
Sorry for interrupting your video, but I have an important message to share. At Realvision, we pride ourselves on providing the very best in-depth expert analysis available to help you understand the complex world of finance, business, and the global economy. So if you like what you see on Realvision's YouTube channel, that is just the tip of an iceberg. You should come over to realvision.com and see how we are not leaving any stone unturned, from publishing more in-depth videos, live discussions, written reports, and our latest feature, The Exchange, where you get a chance to engage with experts and fellow subscribers and learn from everyone's experience. It is an experience which you live and you learn from. So if you go to the link in the description or go to realvision.com, it costs you just $1. I don't think you can afford to be without it.
Numbers go up anyway, because before it was traditionally the baby boomers who were driving the activity, and now you've just brought in another 80 million people into the investment world. So maybe valuations change again on demographics. But we've also talked about what happens to the pensions industry when those baby boomers come out. Where do the asset prices clear between boomers and millennials? We're seeing it with housing now, as more people start participating in the housing market again. So these are things that, often they take us by surprise. So the first reaction is to call it a bubble. And again, I don't really know. I do see risk, as I said before. I see a lot of risk in the US market because even if it's not a bubble, the speculative activity is just monstrous. When mutual funds have no cash, the lowest cash they've ever had in history, tells me there's no buffers in the market. Could that just create more volatility? Is the long volatility bet a bubble? Because there's a lot of people in that. Again, these things are interesting me. Crypto, we're looking at that, and many of you have seen by now that I've been using stuff like Metcalfe's law to try and get an understanding of that, because again, with stocks like Amazon and Facebook, everybody said they were bubble stocks until they realized that it was all about network adoption effects. And everyone was like, oh God, we didn't value this correctly. Maybe that's right with crypto. That's my personal view. And maybe that's right with the stock market overall. Could it be that there's a Metcalfe's law effect as this new generation comes into the market? And real estate, what does that all mean? Real estate's gone kind of batshit crazy in this environment. And that, to me, is something that is interesting. What happens if interest rates go up? Can all of these people suddenly afford this? I don't know. It's not clear. So these things are really of concern, but they're also a ponderance, because I don't want to miss the signal from the noise by using my old biases. And also, there are certain things that are definitely not a bubble. And we've talked about this, or I've talked about this in the past, which is stuff like emerging markets. They've underperformed developed markets for about 15 years now. It's one of the longest divergences in history and one of the largest. So our developed markets, the bubble, and the baby boomer generation coming out, pop it over time. It doesn't have to be a sharp fall. We've seen it in things like oil companies that over time, people just want to own less of them. And so over time, they just underperform. That doesn't mean you can't have cyclical performance. But these things are really, really interesting because we're going to find the performance of that. Is ESG investing a bubble? Again, all I know is regulation is forcing more and more people into that, whether it's in Europe and it's going to come in the US. More stimulus that's related to the green economy is going to put more money behind that. How big does that bubble get? Is it a bubble, or does it actually have productive uses of capital that change society forever? I think it might be a mix of both, as it always is. Usually there's something behind the narratives that create the reflexive loops that cause bubbles. And also, to be real about it, is, as George Soros has talked about in his book, Soros on Soros, it's that reflexivity as people build onto a narrative that is actually all powerful. And we can make a lot of money from investing in that. But, my own bias is I'm terrified of the US stock market, and I have been for a long time. And I've been wrong for that. I haven't been short it. I recently bought some puts, but that's about as scary as I'm going to get in trying to pick a top in that thing, because I don't really want to, because the reflective loop is huge. The money printing is massive. The new participation of new participants coming in is enormous. So I know it's a worry, but can that all be offset? And that's why, that for me, I find Realvision so valuable. And I first did this several years ago when I saw something going on in the oil markets and I didn't understand it. And I reached out to Twitter and said, give me the best experts on oil. And I did a whole bunch of programs picking their brains. And since then, it worked super well, because people who come with experiences that I don't have and perspectives I don't have came on. And so we try and do that periodically for Realvision. And this whole idea we've got coming up is, can we get other people to figure this out? And I've already done some of the interviews before doing this piece, and there's some really, really interesting stuff. There's the wide-eyed optimism of Silicon Valley and technologists. There's the pessimism of the value investor and the anti-central banker. There is a narrative about modern monetary theory that it's going to create inflation and the world's going to blow up. I don't know. I don't know. We've not done this before, but I'm not sure the answers are ever going to be black and white. And so that makes it even more important for all of us to kind of sit down and try and pick apart all of the narratives and work out what works best for us. What are the risks? Because really bubbles are about, can I invest in them and make money? Is crypto in the middle of a bubble? Will it go up much further? My view is probably and yes. But the other thing is where do I have risk that I shouldn't have? And for me, it's the US equity market. But again, I can be dead wrong. But I'd rather allocate to something else. And my big bet was the crypto bet. And the crypto bet, I said, it is the asset that's going to be the super black hole that sucks in all other asset performances. And to this day, it's true. Ethereum was another bet of mine. And, at time of recording this, Bitcoin's up 30% on the year. Ethereum's up 120% on the year. And we've only just started February. I mean, it's extraordinary. There's no other asset, nothing, no commodity, nothing that has come close to any of this. So, that narrative as it builds creates that reflective narrative. So what it is in this is finding out where we can make the best bets in a slightly risky, unclear world. The bubble of central banking is the narrative that almost all of us share. We can see it dwarfing most other macro factors these days. It makes it really difficult for those of us in macro to even use economic variables any longer. And we need to think through those kind of things that are all part of this equation of understanding this framework. People like Lacey Hunt, super useful to really find out how this all interconnects and to try and get a combination of views within all of this too. We don't want just the one view. Central bank printing is bad. Well, it's bad from some perspectives and good from others. It's been good for the housing market. So if you're in real estate, it's been great for you. It's been good for your 401k portfolio, but it's been bad for your savings in cash and other things. So it is a level of complexity that most people don't really know how to deal with, and nor do I, to be honest. And that's why for me, to do something like this, to get these kind of people together really helps me. I mean, I've been through many booms and busts, and I've seen bubbles. I mean, I started my career in the bond bust I started before that, but the bond bust in 94 was the first major event that I saw. And that was also the Mexican crisis around that time where the emerging market bubble first popped. The next bubble that I dealt with was the 1998 and 97 Asian crisis that morphed into the long-term capital crisis. And that was a huge bubble burst as excess capital had been allocated to countries that couldn't really afford to pay. And they had these peg currencies to the dollar. And that was a massive deflationary wave that occurred roughly when China entered the WTO as well. And the bubble of globalization happened that seems to be unwinding now in front of our eyes. The next bubble that came straight out of that, because again, the Federal Reserve jacked up everything into that and drew the line and said, we can't have assets falling and we can't have too big to fail falling either. So we're going to prop it up. That led to a kind of green flag to say, go for it, the equity market. And what we saw was an enormous speculative bubble that came out of the tech stocks particularly, but equities overall. And that also had a backdrop against the start of the indexation bubble, as most of the big pension funds and asset allocators were able to use futures in their asset allocations to passive funds. And there was a lot of passive fund vehicles. So that created that. The next bubble that I was part of was then the commodity bubble and the China bubble, which happened over the early phase of the 2000s. Everybody's eyes went to, where's the next big opportunity? It's China. China exploded. Anybody who sold anything to China exploded. Copper, oil, anything, because there was a marginal new buyer of some magnitude. And in the end, I was writing pieces about the fact that the China miracle was driven on debt, and that there was going to be a payback. And we've seen that within the Chinese economy and the performance of Chinese assets over time. They've not done as well as they were back then. And, it remains to be seen whether the end of that financial bubble gets popped or whether it's a slow workout, Japan style, even though the Japan equity bubble fell. But then the economic bubble and the debt bubble has been trying to be worked out over time. The bubble that came straight out of the China situation also was a domestic bubble in most economies, and that was property. Because people thought, well, interest rates are low forever, we can start buying property. So leverage. And leverage has been a feature of almost every bubble in history. And so we've seen, we saw record leverage in the property market, and that bubble burst too, when the debt markets couldn't stand up with all of the debt that was there, and then we had to pick apart the carcass of the financial system. The next part of the bubble, well, I don't know, but social media has been a big part of it. The size of Facebook and Google and Amazon and all of those new tech stocks have seen truly extraordinary returns. Are they the bubble? It's not clear. Is it the passive bubble? That possibly. Some people say the bond market's a bubble, and I don't think of that because I don't see speculative activity in the bond market. All I saw is everybody fighting me every time I say I'm bullish bonds, and I have been for 30 years. Everyone calls me an idiot and can't you see inflation's coming, and it never comes. Maybe there's a bubble in inflation narratives. Maybe there's a bubble in the reflation trade right now, which is one of the things that I think is out there. So those bubbles are interesting. And then we can think of the world in the anti-bubble terms. I think, by the way, crypto will become a bubble. But the anti-bubble term, in anti-bubble terms, well, crypto is actually an antidote as well, which makes it very interesting to me. And that's what makes it have this weird S-curve that keeps going up but has these boom-bust cycles. Gold is a clear anti-bubble. It's certainly not in a bubble. So anti-bubbles, as Diego Parilla talks about, I think are really interesting things. Anti-bubbles are the long vol trade. But I remember the long tail risk trade as well that came out in, let's say, 2012, 13, 14, 15, and that blew up and almost everybody had long tail risk blew up. But now there's different types of long vol structures. Does that change the dynamics of those markets? Again, I don't really know, but I do think it's interesting. But I also know whether there isn't a bubble. I mean, there's not a bubble in commodities. There might be a short-term bubble in the positioning of commodity prices, but commodities have been held down over an extended period of time as they've worked out the worst excesses of the last bubble. And I think, gold miners and things like that are at the later phases of that. Other companies are not so sure. I'm not sure copper really got rid of it all. But we'll see. We'll see. But that's interesting to look forward to future expected returns. And the same, I think, is true, as I said, of emerging markets. But maybe I'm wrong. Maybe there's a new trend change to inflation too. How do we play that? What does it mean for the valuation of SaaS stocks? What does it mean for the bond market? Again, I have more questions than I know the answers to. And, I'm with you guys on this journey of trying to figure this all out. I've got my own biases. I've got my own kind of perspectives on where I think the opportunities lie. There'll be other opportunities coming along. I think one thing that people don't really think about is I think the pharmaceutical sector is something that everyone's in biotech and blah, blah, blah. But really pharmaceuticals, if you think you've got 76 million baby boomers in the US alone, and then you've got about the same again in Europe, the pharmaceutical sector is going to have an enormous amount of demand just from the aging population. And I don't think that's probably priced into regular pharmaceutical stocks. Ignore the vaccine thing, but it also shows how flexible and incredible these companies can be. That was as impressive as one of the technology companies creating an entirely new platform. This was something truly amazing in how fast this got done, how science and the pharmaceutical companies came together and scaled rapidly to solve a problem. That tells me maybe they're underpriced and there's something interesting within that too. So anyway, let's see where we get to over the next couple of weeks or so. Let's have some really interesting conversations. Let's keep our minds open. Let's check our own biases at the door and let's find out, is everything a bubble? Or is that really even not the right question to ask at all? I hope you enjoy it. Look, get involved in the exchange. Let's get some conversation going. Again, we've all got perspectives. Many of you in the exchange, for example, actually work in different industries, and you can add your perspective to this too. Because we don't know, but I do know that the hive mind, including our experts and all of you watching this, are going to help us discover what's really going on, where the opportunities lie, and where the risks lie. That's the best we can do.
Thank you for watching this interview. This is just a taste of what we do at Realvision. To learn more about the complex world of finance, business, and the global economy, click on the membership link in the description. Give us 7 days to change your life. This will be the best dollar you ever invest.